welcome to CoinDesk Live. We are coming to you from the Ondo Summit in New York City. I'm Jen Sanasi.
And I am Sam Yu, and Jen, we are back.
We are back, first CoinDesk Live of 2026, and it's looking like it's going to be a good one. There is a huge crowd around our desk right now.
Yeah, it's buzzing here at the Ondo Summit. We are in the middle of Columbus Circle, Jazz at Lincoln Center, a historic building, and there's a ton of people, TradFi, crypto, all discussing the future of finance.
Sam, you and I were at this event last year. It was in the exact same location. The snow was a paid actor. It was beautiful in the middle of winter. And we were just starting to talk about tokenization and what it could do to bring the financial system into the future. And I think we've seen a lot of that come to fruition over the past year.
I think people are extremely excited about tokenization. At Davos this year, that was a big topic people talked about. The White House had a crypto council meeting this week with a bunch of folks in the space, all trying to figure out how do we efficiently tokenize, how do we look through the lens of advancing the financial rails without breaking the old system, I think is how this thing is really about to play out. At something like the Ondo Summit, you have all of the big players you need in the room to be able to make those decisions.
I think it's easy for traditional financial players to get excited about tokenization because they really understand how it's solving the problems and the challenges that they've experienced over the years, right? It's not about totally disrupting the financial system, it's about bringing it into the next era, it's about being the next iteration and solving some of those challenges, and it's like one of the really real, I would say, use cases, one of the really real things that have come out of the space.
I think it just makes sense, and I think that's the thing that people need to realize, which is the financial systems of old were built on what worked at the time, but we live in the internet economy, we live in the idea that most money is virtual, and the ability to say attention, especially, can be traded 24 hours a day. I think that's where this whole world is going. Now, it happens in sports, it happens in sneakers, it happens in tokens. And I think we need to be comfortable that the stock market is going to be on-chain. We need to be comfortable that a lot of the ways we leverage finance is going to be utilizing blockchain in some way or another, whether you know it or not.
If you look at the markets this morning, you'll see a sea of red. And there was a time when you would be at a conference, and if that was happening, the mood in the room would be depressed. Folks wouldn't be in attendance. And it's interesting to see this large crowd here still ready to talk about the future of finance, still ready to talk about tokenization, still ready to talk about the infrastructure, not focused on price, because the two things are really separate now, right? That we're not only talking about price action, we're not only talking about the tokens, but we're talking about building the infrastructure for our financial future. And I think that shows a little bit of a maturation.
I think you can look at anything. You could look at the cell phone, you could look at MP3s, you could look at any of these disruptive technologies and say that the arc is longer than we think.
Yeah.
Right? Whether that's 10 years, 15 years. AI has probably been the outlier in that it's been worked on for a very long time, but it seems to have come on so recently. I think the fact is we are in the middle of where we need to be right now, and a lot of the guests that we're going to have on the desk will sort of help us, I think, understand that.
Well, let's talk about some of those guests we're going to have on the desk for our audience that's watching at home. If you're just joining us, we are at Ondo's flagship event in New York City, the Ondo Summit. There are going to be folks on stage. I know Tom Lee is going to be on stage. There are going to be folks representing some of the biggest names in traditional finance, like BlackRock, WisdomTree, Goldman Sachs. And here at the desk, we're going to have some of the biggest financial players and also some of the biggest names in shaping regulation and policy in the US.
I'm excited to have those conversations. We're going to have Patrick Witt. Patrick yesterday was hosting a meeting in Washington with a lot of the big leaders in the crypto space as well as the Banking Association. I'm interested to hear his take on how that went and really how we're going to get sort of the banking system and the crypto system a little closer together. I'm pretty excited for the fact that we have Patrick McHenry is going to stop by. I think we're going to learn from some really interesting innovators and builders, as well as the people who are, bulls in the space, some of whom we might have at the desk right now.
Sam, you know what I just remembered? For folks who follow CoinDesk Live, if you watched the last broadcast Sam and I did, I forget where we were, we made predictions on where the price of Bitcoin would be at the end of the year. I think I said $110,000. I was completely wrong. I think you were closer if we play by Price is Right rules. We'll have to go back and find that video. But Sam, I think I owe you dinner.
I'll take it. Hong Kong next week.
Okay, I'll buy you dinner in Hong Kong.
There we go.
Let's get to the first guest of the day, a pioneer who launched one of the first crypto funds in the US back in 2013, Pantera Capital's founder and managing partner, Dan Moorhead. Dan, hello.
Hey, thanks for having me.
It's great for you to be here. How are you doing?
I'm great. It's a great conference.
It is a great conference. Now, Sam and I were just talking about markets this morning, sea of red out there. I love that we have you at the desk as our first guest because Pantera first launched its crypto fund in the US when Bitcoin was just at $65 a coin. You've been through the ups and downs. What should folks, advisors, institutions, and even retail traders who are looking at what's happening in the markets and trying to make sense of it before they maybe dive in for the first time, what should they be thinking about?
Sure. Hey, I'll admit, if we sat down on New Year's Day 2025 and listed out all of the very positive developments that would happen with the SEC and Congress passing stablecoin legislation, all those things, and you would have said, hey, crypto up or down? I would have said up. And crypto was down 9% last year. I think it's a function of this, the hype cycle. Crypto is going to change the world, and anything that important gets a little too hypey. And it also does have a 4-year cycle. And when I got into this in 2011, someone mentioned it to me, and I was like, hey, if we all know it's going to happen, it can't happen, right? But it does happen each time. And after Terra Luna and FTX and Bitcoin was at about 20,000, we did all our work on previous cycles and said Bitcoin would peak at $117,452 on August 11th, 2025. And it did, that day, which is pretty freaky. But one of our LPs said, hey, congrats, great call, but doesn't that mean it's going to go down tomorrow? I was like, oh no, this time's different. You know,
everyone says that, this time's different.
Unfortunately, it wasn't different. And in hindsight, I think the factors were, there was a huge demand from two publicly listed things, ETFs and digital asset treasury companies, combined for over 100 billion of net buying. And that drove the market up a lot. And it stopped in September, and the market sat back. What I would say to the long answer to your short question is, you gotta view crypto as a multi-decade trade, and it's gonna change the world, but not overnight, and so only invest as much as you can afford to withstand a pretty, severe downdraft, but hold it. Hold it for 5 or 10 years. Anyone that's ever held Bitcoin for 4 years has doubled their money or more, so, just put on the amount you can hold and hold it.
Dan, you mentioned the ETFs. I think about the average price entering ETFs for Bitcoin as an example is about 7,000 higher than it is right now.
Okay.
So most people are kind of underwater at the moment, but I think to someone who has had to manage the volatility up and down, and obviously in the great trajectory of up for you, long term, how do you just day by day look at it? Is it something that you get down about, or something you're just like, I know it's going to happen, it's just about when?
Yeah, so first couple cycles, totally sweating it every cycle. Now, I've just seen this so many times, and still so few people actually own exposure to this, that we're still in the very earliest stages. So for people that are 7,000 price points underwater, just hold it. Bitcoin as a proxy for our industry has almost doubled every year for the 13 years we've been doing this. If you hang out for like 6 months, it should be back in the money. And 5 or 10 years from now, way higher.
I got to ask you this because it was very popular on CoinDesk. I talked to Bitwise CIO Matt Hogan recently. He said Bitcoin could be $6.5 million within the next 20 years. And now that we're talking about long-term holdings, you don't have to give us a projection if you don't want to, but what do you think when I say that?
Yeah, so that's the greatest parlor trick, is like everyone coming up with an even bigger number for their, their price. We've forecast 3 orders of magnitude already. I think you go up a 4th order of magnitude, but once you get there, you're starting to get to be maybe 10% of assets in the world and things like that. So I think a number a little bit below 6 million gets you to, $750,000 for Bitcoin gets you to kind of starting to be real in the financial markets. It'd be hard to go another 10x from there.
Dan, I want to get your take on, you guys had BitGo just go public last week. You guys were early supporters of. You've been in Circle, Amber Group, Gemini. It feels like the last 6 months has been an amazing time in public markets for crypto. Do you think we're going to see that trend continuing?
Well, part of the answer is the SEC had restricted IPOs for so long, and so we are seeing kind of a pent-up pressure that's been building, and so we probably won't have the same pace. Pantera's had 5 IPOs in the last 4 months. We're probably not going to have 5 every 4 months going forward. But it is a huge milestone for our industry because all those investors like, BitGo, we've known those the team for 12 years. Circle, probably 12 years. Figure also went public recently. I've known Mike Cagney for 25 years. All that money can now get recycled, and that's the huge thing. Once companies go public, the original investors can then get their cash back, reinvest in new entrepreneurs who are going to bring the next wave of innovation, and it's really important for our industry.
I just want to follow up, because you guys do make so many investments. What are you looking at right now? What's interesting to you and who you're investing in?
Oh, so one of the things, you mentioned risk, volatility. Crypto seems so crazy. In the normal real world, 70% of venture companies go broke, right? Yeah. And then one or two do okay, and then one kind of helps you make 2 times your return. We've been doing this for 12 years. 86% of our investments have made money. It's crazy, and part of it is we have a great team, we work really hard. But I'll be honest, part of it is just crypto is such an amazing space. And so it is so much less risky than the press, kind of makes it seem. So that's why I think, getting exposure, now versus 5 years from now is still so important.
I need to tokenize copy trading Dan. That's all we need.
All right, Sam's going to tokenize that.
I'll talk to Ondo.
You mentioned digital asset treasuries earlier, and I want to talk a little bit about that. That was a big theme that came out of 2025. I know that Pantera closed more than $500 million in funding to launch a Solana digital asset treasury called the Solana Company. There's this concern now that without real business operations and real business models, these digital asset treasuries are going to start trading below their net asset value. How are you thinking about that? What would you tell people who have this concern, who are watching digital asset treasuries continue to truck along?
Yeah, so I think the reason so many people put money into digital asset treasuries is they're a fairly asymmetric bet. There was a time some were trading at multiples of their net asset value, 3, 5, 8 times. And so if you could buy something at 100 cents on the dollar that might trade at 300 or 400 cents, that sounds great. And I really think the downside is something like 80 cents on the dollar, because once you get below that, it's economically rational for the bigger, stronger ones to buy up the littler ones at lower prices. And so there's been 1 or 2 happen so far, but I would say over the next 12 to 18 months, you're going to see a lot of it, where the very well-run DATs that have access to capital that can sell above net asset value, buying ones that trade at 60, 70, 80 cents on the dollar, because it's accretive, right? If you're buying, 100 units of Bitcoin for 80 cents, that's good. And so I don't really see it as a problem. Like, it'll resolve itself. It'll take some time, but it really is something that can easily get resolved.
You see a consolidation, I guess.
I do. We don't need, I don't know how many DATs, a couple hundred probably now. We don't need a couple hundred DATs. We need a couple very well-run ones. And it's, it's like Wayne Huizenga rolled up all the video stores in America called Blockbuster, and then did it again with Waste Management. Like, someone's going to be the Wayne Huizenga of DATs, right? Somebody's going to roll them all up, and you're going to have probably 1 or 2 really good Bitcoin ones, 1 or 2 Solana ones, 1 or 2 Ethereum ones.
I even wonder about how much investors are pricing in the yield, right? I think about the Grayscale Solana ETF, and they're giving, I think, 7% yield. So it's like, if you're buying it at the right price, you're also locking in a return that is hard to even get on the market.
Yeah, it's a great point. If you buy some at 80 cents on the dollar and goes to par, that's 25% extra return, right? And so that's why I'm not worried about DATs. When they're trading at a discount, they start looking pretty attractive. And you'll see that. The capitalism is very efficient, and that's why there's so many DATs. They were trading a huge premium, so we had a ton of DATs. At a discount, you're going to have less DATs.
We started the conversation talking about 2013 when you launched the first crypto fund with Pantera. We're sitting here in 2026. It is really an amalgamation of crypto natives and institutions, massive institutions like BlackRock. Did you think that we would get here so soon? I mean, I know it's over 10 years, but that's really fast when we look at how the speed at which this industry moves.
Oh, I agree. It's come a long way, but the thing I would still stress is this is just the beginning. The median holding of institutional investors in cryptocurrencies and or blockchain venture is 0.0. Literally, the majority have nothing. And so while there's a couple great companies like BlackRock that are in the space, Fidelity's been in the space since 2014. The oldest bank in America, Bank of New York, has been in this space. Most aren't, and that's why I'm so bullish, right? That all those people, they ultimately have to cover their short. Someday they have to buy crypto. And so it's coming, and again, it'll take 20 years. I think this is a very long trend, but it will happen. It'll definitely happen in our investment lifetime.
Yeah. Dan, thanks so much for joining us to kick off the show. It was a pleasure having you at the desk.
Yeah, it's been a blast. Thank you,
Dan.
That was Pantera Capital's founder and managing partner, Dan Moorhead. I think that was a great way to kick off the day. What do you think, Sam?
I love it. Everything I heard was important. I think that it shows the power of conviction. Mm-hmm. You get in early, you keep, you hold, you make it happen, and it can pay off. Look, not every bet you're going to make is right, but talk about, at 86% in the money, Dan's doing pretty well for himself.
Dan is doing pretty well for himself. He did mention crypto is a long-term trade. We're still at the very beginning. And you mentioned a stat right before we started the show, a report from JP Morgan yesterday. Yeah. Remind me.
89% of family offices are not holding crypto at the moment.
Yeah.
That's, they surveyed about 350 different family offices, which just says to me, you have a lot of room to grow and convince more people why this industry matters so much.
All right, we'll continue talking about how more folks get into crypto as the program continues, but let's welcome in our next guest, the co-founder and CEO of Alpaca. Alpaca is a global leader in brokerage infrastructure, providing the APIs that allow fintechs and banks to offer stocks and crypto to millions of users worldwide. Yoshi Yokokawa, hello.
Hi.
Hey, thanks for joining us at the desk.
Great to be here.
In our last interview, we ended it by saying, we're still so early, we're just at the beginning. Talk to us from your perspective where we are. For folks who don't really know Alpaca, Alpaca is the infrastructure for the majority of the tokenization we're seeing. Just talk to us a little bit about how early we are in your eyes.
I think it's so early. I see this whole financial system going on chain. I think about 1970, it was financial system was all manual. It became digitized. It took 20, 30 years, and now still some people working on it. Mm-hmm. But this financial system now going from fiat to on-chain. So that's how big this whole thing is, which means that we are really, really early. We're just only looking at a really tiny piece of it.
Yoshi, how did you guys figure out this was a problem you wanted to solve?
I think that I firstly saw that how the things are moving to on-chain, and then there's a practical reason why, right? Because moving on chain allows less systemic risk, faster execution and settlement, which is good for everyone. So it's going to go there. But the thing is, we don't know how we get there. So that's why there are many things that we see, and then we wanted to be definitely a part of it. So we definitely saw the opportunities, making sure that we have a very deep fiat integration. At the same time, how we can support the tokenization and transition to be the fiat player, combining the transition into the on-chain.
Yoshi, you have a deep entrepreneurial background. Alpaca recently raised $150 million Series D round. Congratulations on that. The company's now valued at $1.15 billion. Talk to us about your conviction. What made you want to spend your time solving this problem, given your background?
So I grew up in Japan and the US, going back and forth. So the problem that I saw was this personal frustration. If you're in the US, you have so many accessibility to cool products. You're in Japan, you don't have it. So just being in the different countries, just restricts you from having the access to something. So that really frustrated me. So that is true motivation of what I do, and trying to build that global infrastructure, allowing accessibility to a lot of different things. And being on chain, exactly that. It just kind of goes over the borders of the countries, right? So that really fascinates me, and excited to be in this space.
Yoshi, I went down a rabbit hole last night on researching you. I was honestly fascinated by your trajectory. I think because you were at Lehman a long time ago. Back in those days, you've done a lot of different entrepreneurial activities. I think about the people who say that most great entrepreneurs fail until they succeed, and you tried a lot of stuff. You sold some companies. What is it about just building that really inspires you to keep wanting to do this over and over?
I think at the same at the end of the day, I feel I go back to my personal experience and something that I want for life, right? And that really comes back to my personal frustration that I just talked about. So how can I contribute something that this frustration will be solved? And I don't think this is only my problem. I think it's a lot of people's problem. So if I can be a part of that, I will try my best and try.
Sam and I mentioned we're going to be talking about regulation a little bit later in the show. I know that you are MiCA compliant, available across 49 US states and in the EU. Crypto regulation has been a sticking point over the last few years. It's been difficult for folks to manage regulation in one jurisdiction, let alone many.
Right.
From your standpoint, how have you maneuvered that? And was it maybe a little bit easier than some other companies, given the fact that you really are an infrastructure play?
Yeah. I think yes and no. Like, the first thing is that, like, we do work with a lot of regulated financial institutions globally. We work with, like, hundreds of financial institutions in 45 different countries. So, it's important to have the right partners who are regulated in each of the countries. So that's one thing. The second thing is that this regulation around crypto, it's not only about crypto. Like, it's even fiat regulation. It's still fragmented. Some countries don't allow people to purchase foreign securities, for example, and some countries don't care. So there are a lot of differences even in the fiat regulation and crypto regulation. So like we approach that in a very similar way. So, but like we're very, very careful about what we have to protect and we have to be compliant about.
From a risk perspective, I imagine you're looking at the U.S. on one side and Germany on another and Hong Kong on another. The complexity must be quite deep, especially when you add the fiat side, crypto, and then now with tokenization of stocks. Is there an approach that you think that like TradFi companies wanting to come into the space should think about before they do this?
Sure. I have a belief that anything just falls into the actual practicality, and then so if you look back the history when the securities law started in 1933, there's a reason why for that, right? It's all about investor protection. We don't want to have the people to be scammed. And we want to make sure that capital markets to be healthy, so we want to block those fraudulent money to come in. I think it's going to be the same regardless of it's fiat or crypto. So if you have the right understanding why the rules are there, we can apply the same mentality and the fundamental approach into the crypto tokenization, in my opinion.
What does your roadmap look like? We mentioned that it's still so early. We mentioned there are still so many family offices, institutional investors who are still sitting on the sidelines, retail traders, your general person still sitting on the sidelines. What does your time frame look like? When is everything going to be tokenized?
That's a very, very difficult, because I think people knows that the direction, but people don't know when, right? I mean, that's the whole point, that we knew the mortgage crisis would happen, but we didn't know when. But that's how I think about it. I firstly think about how big this thing is. So if you think about how much of the money that's been custody in the world, it's about $350 trillion. And then how much of that tokenized stocks that's happening right now? It's around only $1 billion that's been tokenized yet. So, okay, it's still a really long way to go. And if you start talking about real world assets, it's much larger than $350 trillion. So I think it does take time. Just think about how the manual financial operation became digital. That took 20, 30, 40 years. That's how big that we are talking about in this tokenization and on-chain system. So we got to be patient, but at the same time we have to be executing one by one what's in front of us.
And Yoshi, we're here at the Ondo Summit. I know you work together with Ondo. How are you guys working together? Anything that you want to talk about in terms of what's coming in the future?
Yeah, sure. Our job is being the infrastructure and custodian of the underlying assets that gets minted to be tokenized. So we do that mainly right now for the U.S. stocks. But we are, adding a lot of different, global markets, equities, fixed income, futures, different type of all the fiat assets on our platform. So, you expect that everything will be tokenized like that.
And I know you're on a panel later today on on-chain capital markets. Give us a little preview. If you have to tell our audience at home, what's the one thing that they might not know about on-chain capital markets that you think is really important for them to start thinking about?
So we're going to be, I'm going to be with the person from DTCC. And then I think it's important that a lot of people understand the role of the DTCC. And then of course it's a CeFi, but having the right, ledger system somewhere that's really, really secure, and how the fiat system has been working, understanding that allows a lot of people to understand how it will be when it moves on chain, the tokenizations happen.
We're going to have the DTCC at the desk later on today.
Oh, that's amazing.
And so for our audience to kind of make more sense of that interview, help us understand that a little bit more before I let you go.
Yeah.
What do they need to know about the role about the DTCC?
So the DTCC is really central clearing place, right? So all the ledger, who holds what securities, that's really protected and secured by that entity, DTC. So like that's how significant that is. That's the core of like what's happening in the financial services in general. So even that player is proactive about tokenization and coming into an on-chain system. That itself shows the very much like proactiveness of the whole system going on-chain. So I'm very excited about that, how DTC is very aggressive about it.
Yoshi, thank you very much for joining us at the desk. It was a pleasure.
Thank you.
All right, we are going to take a quick break. When we come back, Patrick Witt joins us.
Grabbed a coffee with
Hey everyone, welcome back to CoinDesk Live. If you are just joining us, we are coming to you from the Ondo Summit in New York City. We are now joined at the desk by the Executive Director of the President's Council of Advisors for Digital Assets at the White House, Patrick Witt. Hey Patrick.
Hey, how you doing?
Yeah, we're doing good. How are you doing? You came off of a big meeting yesterday.
It was a big meeting, productive meeting, constructive. Folks came forward, aired their views. I think we exposed some new areas of agreement, which was great, and really zeroed in on the areas of sharpest disagreement. And then from there, we're kind of forming up teams to continue the discussions, get down to red lines, and start trading paper, and hopefully see if we can solve this.
Can you talk to us a little bit more about where those areas of agreement lay and where there is still disagreement?
I think the main area of agreement is folks understand they're not trying to deceive customers here. So disclosures, some of the prohibited marketing practices, not being able to say that these are FDI insured, deposits, for example, anything that would deceive someone into thinking that these products are something that they're not. That's definitely an area of agreement. Folks, I think, in the room understand too that the purpose of this product is not ultimately just to mimic bank interest. They don't want folks, necessarily sitting idle and collecting yield on those. They really want people engaging with their platforms. We heard that from the exchanges that were in the room. Is their real interest is folks come on their platforms, they use stable coins for payment, for collateral, but the money's in motion. And so I think what we're trying to solve for is, as we've heard from a number of the senators, both right and left, is that interest paid on a balance, that idle passive interest there that feels most like a bank deposit would. And we're trying to, I think, thread the needle on prohibiting some certain activities, clearly permitting others. And I do think we're going to get there on this issue.
So still a little bit of a disagreement on earning yield on holdings in a centralized exchange.
Yeah, I think fundamentally this is not necessarily the only product, but certainly a core product and a core part of contributor to the bank's business model. So they care very deeply about this. We hear it a lot, in particular from community bankers. The ICBA was there, Paul Mursky, contributing to the conversation. It was great to have him there. And again, we've heard it from senators on both sides of the aisle that this is an issue that they want to make sure gets a hearing and that we hear from both sides. And our role in this as the White House, we're trying to broker a deal. My number one job is to get a bill to the president's desk. He's remarked on this over in Davos, again just yesterday in the Oval Office. He wants to see this bill get done. We want to have another successful signing ceremony in the White House like we did for the Genius Act. I think we can get there, but it's going to require folks to come forward in good faith and start getting down to brass tacks and the words on the page, because as we know, the words matter. They will be interpreted many times over after this, and so we need folks to come forward with their best foot forward, understanding that we might not be able to get fully there, but try and find some other creative ways that we can bridge the gap.
Patrick, I was thinking a lot about just general technological innovation over the last couple of weeks, and when you look at it could be PayPal, it could be the iPhone, right? Both were very disruptive, and they kind of caused the rest of those industries to kind of come along with them. And I'm wondering if this is actually that opportunity, that moment for the banking system to say, hey, maybe there's a new way to do things that actually can reward customers more, even though it feels a little uncomfortable. Do you get a sense that they're willing to at least have those conversations?
I do, and this is a point that my boss, David Sachs, has made a number of times. I've spoken about it. We believe that there's going to be a convergence of business models in the future, and right now, stablecoins are perhaps somewhat threatening for folks that aren't so crypto native, but ultimately, this is going to be an opportunity for banks and crypto companies alike to offer new products, products that get built on these products or that these products enable, that stablecoins enable. So we do believe it's a win-win. I know it's threatening to folks right now. I think there is probably, we're dealing with an intermediate period as people warm up to and get more familiar with these products, but we do have to find a solution because we know that this bill can't advance out of the banking committee unless we arrive at some kind of compromise here. So we're doing everything that we can from the White House to be that broker and good faith negotiator and help folks arrive at a good conclusion.
What Sam just described is really a disruption. From your eyes, or from the White House's perspective, what does a win-win look like for the banks?
You know, I think it's important to keep in mind that any deposit flight or any movement of money over to stablecoins is not removed from the banking system. So it stays in the banking system. They can ultimately offer these products to their customers. Stablecoins enable different use cases like micropayments. They might allow certain smaller banks to actually get into remittances, cross-border payments. So it's an opportunity for them to potentially expand their customer base in a way that might not be obvious right now. But again, it's going to take some folks to warm up to the idea, to do some more education on the technology. It's going to require people on the crypto side to also meet the banks where they are and meet not just the banks, but the members who have expressed concerns about this. We're going to have to do a lot of work there also to bridge that gap in terms of knowledge base, but then also just be empathetic and hopefully arrive at a conclusion.
And the president has stated he wants America to be the crypto capital of the world, so the only way to do that really is to get them to sort of come along on this journey with us.
You know, we've done a lot already. The Genius Act, the deregulatory measures that we've taken, ending choke point 2.0, the executive order on the strategic Bitcoin reserve, but we do view this bill as kind of the crown jewel, the final piece here that we need. Depending on who you're talking to in industry, kind of where they're seated in the overall ecosystem, many would say that this bill is as important or perhaps more important, certainly for their business models, than Genius. So we've got a job to do here. I'm committed to getting it done. I'm encouraged by what I heard yesterday from the people around the table that they're also committed to getting this done. But this is going to be an important issue, but the important thing to keep in mind for everyone, crypto and banks alike, is this is, we've taken this to the extremes, I think, on both sides. There's so much goodness in this bill here. Let's not throw the baby out with the bathwater. Let's not let perfect be the enemy of good and see if we can come together and find a resolution.
Patrick, I'm starting to sound like a little bit like a broken record here. I think I ask you the same question every time we chat, under some different circumstances. If we can't get to a place where both sides agree, where the bankers and the crypto exchanges can come to agreement, does the legislation get passed before the midterms, or is it halted?
I think, obviously, Chairman Scott is going to have to be the one to make that call. I think ultimately, if there is agreement on the Republican side of the aisle, they can at least advance this on a partisan measure. We don't want that to be the case, but if ultimately those votes were in place, I think you bring this bill to the floor and then you let the chips fall where they may. The bipartisan negotiation process can, in certain instances, only take it so far, and then there are going to be some outstanding policy differences. But that's why we vote. That's why we vote. That's why folks are going to ultimately have to go on the record. We are committed to advancing this bill and letting the voters and the interested parties here see where people come out on the legislation. But on both sides of it, we want the absolute best product that we can possibly get to the floor of the Senate, and then we're going to take a vote.
You know, I was reading some stats that said 1 in 7 on the conservative end, 1 in 4 adults are owning crypto in some capacity. that feels like something in America. That feels like something where you're kind of beyond party lines at that moment, And there are some folks on the Dem side, the Rokanas and Gillibrands and Warners, who are really trying to help bring this together. You mentioned the bipartisan sort of nature of what you're trying to do. How do we get more people to stop looking at crypto as a political issue and really just as how do we advance the financial system into modern times?
I think the point that you make is the right one that we've tried to hit on a number of times. It's unfortunate that technology could ever become politicized, but this one has, and that's really a shame because America is going to win with the advancement of this technology. This is a pro-innovation administration, a pro-innovation president, not just pro-crypto, but across the board, whether that's AI or nuclear, all these innovative technologies. We want them to be built here at home. We want America to continue to be that engine of innovation and growth in the world, and sometimes it requires some bedrock foundational legislation that establishes a healthy amount of regulatory certainty, but not overly burdensome. We think we're trying to hew closely to that efficient frontier in this language or in this legislation here, but that's the task before us because a new global financial architecture is being constructed right now. It has been over the past 5-10 years, let's say, and it's going to continue to develop. So if we fail to meet this moment right now, we will see it continue to be built, just not in America. And that's to no one's advantage. The people that have concerns about the national security implications of this or illicit finance, it serves no one if ultimately this activity is offshore. We want to bring it within the regulatory fold. We want to make digital assets part of our infrastructure here with appropriate safeguards and authorities for different regulators to apply the appropriate regulation. But that is an important point that we make to senators, and I think a lot of them get this, is that it's bigger than a political issue. It really is foundational to America's standing in the world as we go forward.
Part of crypto being politicized, I've heard some people say, has been because of government officials having crypto dealings. Curious if there is any limit on crypto business interests that the White House would accept for senior government officials as this ethics conversation continues around the negotiations around market structure.
Yeah, so I personally met with a number of Democrat senators and their staffs over the past couple months, trading real proposals back and forth. Some of the initial proposals, without going into them, that came over from Senator Adam Schiff in particular, were just completely outrageous and grossly overscoped in nature. They would have essentially banned spouses, not only from holding, trading, or interacting with crypto in any sense, including stablecoins. They also would have prevented them from holding any senior executive role in any company. So basically, a lot of senators' wives and husbands maybe would have been put out of work by that. So that's kind of where we started, and obviously we're not going to agree to something outrageous like that. We've made clear that there are red lines. We're not going to allow the targeting of the president individually or his family members. I am hopeful, though, that there are a number of Democrats who are much more reasonable on this issue, that have put forward proposals that feel a little bit closer to something that ultimately could be agreed to. But at the end of the day, this is not an ethics bill. We're trying to make digital assets normalized. We're trying to bring them into the regulatory fold, not necessarily single them out for different treatment. If any kind of ethics provision permits Hunter Biden to paint paintings and sell them for a fortune, but if he were making NFTs, then that would be illegal. That just doesn't really make a lot of sense. So I think we're going to be able to find a solution there, but it's going to need to be with those Democrats who are more reasonable and willing to put forward proposals that are serious.
So open to negotiations.
Sure.
And the one thing everyone wants me to ask you, Patrick, so I got to ask it. I don't know if you're going to have an answer for me. Are you able to tell us how much Bitcoin or other crypto the U.S. government is holding?
No, I'm not going to get into that here. But,
we tried.
Thank you for asking. Yes, I appreciate it.
Patrick, it is always a pleasure speaking with you. Thanks so much for joining us at the desk today.
Thank you, Patrick.
Thank you very much.
Cheers.
Thank you.
That was Patrick Witt, Executive Director of the President's Council of Advisors for Digital Assets. All right, Sam, well, I tried to get answers.
I think we got what we got. Nothing wrong with that.
We did get what we got. We are trucking right along. We have another hour and 20 minutes left. Some more big heavy hitters sitting at the desk later on today, especially Patrick McHenry, who really kind of led the charge on this legislation that we've been talking about. And so I'm really excited to hear how he's been watching the advancements of policy and if he has any FOMO.
We should ask him that question. I will say, I think, Patrick Witt gave us a lot of really interesting information there. It sounds like we're maybe not as far away as some of the reports on crypto Twitter were saying when it comes to how the banks and the crypto companies can come together. It really is his job to figure out that connective tissue, and it sounds like he's committed to doing that. Obviously, jury is still out, but we'll see that. I think the nature of how we can make this a more bipartisan approach, I think is great. And I think it sounds like there's an openness to some sort of regulating how our public officials can get involved in the industry.
Yeah, what I heard was open to negotiation. There were no hard stops, at least in the conversation that we had, and a commitment to getting this legislation moving, and that is really what the industry wants. I know I say this almost every time we talk about regulation, but what a vast difference from just over a year ago when it was really hard for industry executives to get meetings with policymakers. It was really hard for industry executives to get meetings with regulators. It was just really hard for them to operate. So I think things are changing really quickly.
I mean, I'm going to say, I think the Democrats were a little blind on this issue and let it get very polarizing very quickly. It's an opportunity. If you look at young people, if you look at diverse communities, they're all interested in how can we utilize alternative assets to invest in, to build in. And I think it was an approach that could have been done very differently that as Patrick was saying, like, they've embraced that this is innovation.
Yep.
And I think that's something that everyone should take a lesson on, that this can be done in a bipartisan fashion.
Exactly what we were saying at the beginning, this isn't maybe as disruptive as it might feel. It really is just ushering in the next iteration, the next version, the next era of finance. All right, we are going to continue on with our programming today, but first, let's take a look at what's going on in the news this morning. Elon Musk's merger of SpaceX with xAI creates a potential $1 trillion tech giant, and it's sitting on a mountain of Bitcoin. The merger is being framed as the future of space-based AI, but it also pulls SpaceX's crypto treasury back into the spotlight. The company is estimated to hold roughly 8,300 Bitcoin, worth $650 million. For years, SpaceX kept this position private, avoiding the earnings volatility that plagued Tesla. But as the combined entity preps for a massive public listing, that shield is about to drop. Unlike Tesla, SpaceX hasn't touched its stash, signaling a long-term conviction that investors will soon inherit along with rockets. Moving on to our second story, Cathie Wood kept buying while the market panicked. ARK Invest snapped up $72 million in crypto-linked stocks on Monday as Bitcoin dipped below $75,000. The firm loaded up on shares of Robinhood, Circle, and Bullish, the parent company of CoinDesk. Wood is doubling down on her long-standing strategy, buying equity weakness during crypto volatility. She argues that Bitcoin remains a key diversification tool, betting that today's lower prices on infrastructure plays like Coinbase and CoreWeave are a bargain before the next adoption cycle kicks in. And lastly, the White House met with industry insiders to dive deep into the deal around stablecoin yield. While crypto executives outnumbered bankers at this meeting, led by President Trump's crypto advisor Patrick Witt, they failed to break the deadlock. The banks are arguing that interest-bearing tokens threaten their deposit business. With the market structure bill stuck in the Senate and a government shutdown looming, the White House gave both sides a strict deadline. Return with a compromise on the language before the month is out, or risk watching the legislation collapse for the year. Those are your top 3 stories of the morning. Follow all the latest headlines on Coindesk.com, and we're going to get right back into it. Our next guest is here. BitGet CEO Gracie Chen joins us. Hello, Gracie.
Hi, Jennifer and Sam. Nice to be with you again.
Good to see you.
Wonderful to see you here. You are on a panel today. It is called Exchange 2.0, from crypto to stocks. That is really kind of one of the themes that's come out from the desk as well. Give us a little bit of a preview. What do you want people to take away?
Well, so since September last year, we rebranded Biget from being a CEX, one of the largest CEX centralized exchange, to UEX, Universal Exchange. Why we do that? It's basically we see the integration of crypto and traditional financial assets. So now at our platform, people can trade almost anything, anytime, and for anyone. And that includes Forex, tokenized US stocks and ETFs, gold and silver, and then along with crypto, Bitcoin, Ethereum, and all the 600 altcoins that we've already had. We see that as a trend, actually, especially after, I would say, October 10th, the largest liquidation historically that happened in the crypto industry. Our users are start to look for diversified assets. Crypto itself doesn't really fulfill their needs anymore. And that's why this is a very important strategic milestone or another step that we're taking at Biget.
Gracie, you're here in the U.S. at the Ondo Summit today. You guys are one of the biggest exchanges out of Asia. I'm interested in what you see are the parallels and the differences between the consumer, both in Asia and in the U.S.
We don't serve customers in the U.S. Due to the compliance and very high competition here. We don't have all the license, so we try not to step very away from the market. But from my personal understanding of, for example, U.S. or North American users in general versus crypto users or more East Asian users that we, or Asian and other parts of the users that we observe, is that number one, the North American users tend to be very much more financially well-trained. They understand the risks better, not just the returns. And they are also looking for not just crypto assets on our platform. Actually, since we launched tokenized US stocks, together with Ondo and some other partners, we've seen lots of volume. Right now, our tokenized US stocks has surpassed the 1.5 billion in terms of cumulative trading volume. And we actually contribute about 90% of Ondo's spot market. 90% of those users come from Biget. So that's a lot of traction we see over there. But yeah, again, back to your question, I think very different in terms of risk tolerance level, in terms of their financial literacy, etc.
Yeah. I just want to follow up, which is both Jen and I were in Korea, we were in Singapore, we'll be in Hong Kong next week. I've always found that the Asian market retail is still very hot there.
It is.
Whereas in the US, it's kind of feel a little more tempered. But the people who are really interested in understanding this, getting the information, the education, seems to be just growing exponentially in that region. Why should people look at Asia as a place that they also should be building for?
Are we talking about crypto industry in general or TradFi? Crypto. Actually, I would extend that group to both crypto and TradFi. For example, if you notice NYC, NYC, and NASDAQ, they both announced that they want to tokenize their US stocks offerings and also offer 24/5, if not 24/7 trading experience to their users. Actually, this week, we are going to launch 24/7 trading for all our stocks perpetuals users. So that's going to be very big in terms of a lot of volume from Asia. If you notice that other than the US market when it's opened during the day, during the Eastern time, daytime, actually lots of volume are still happening outside of this window and around Asian users. So lots of users, lots of volume that all these exchanges or trading platform can capture for sure. But again, in crypto, I would say it is a 24/7 very global market. As any company, startup, or a more matured company, you should look at your users and products from a global perspective. I mean, crypto startups, for example, should be global from day one. So that's just like by default, you should know different markets and try to get as many users as possible.
What products are your users interested in? Are they interested in the tokenized, more traditional financial products, or are they interested in crypto, or a mix of both?
It's a mix of both, and of course, as a 7-year-old exchange, most of our user base are trading crypto with us. We have like a daily trading volume of 20 billion, 10 to 20 billion in terms of the crypto volume. And then for US stocks, like I said, the total accumulative trading volume is only 1.5 billion, comparing to a 10 billion daily trading volume. That's like nothing. But although it's still small in terms of size, as of now, we see lots of growth there. And when the market is very volatile, like these days, gold, silver, Bitcoin, or crypto altcoins are all very volatile, especially going to a downward trend. Users will tend to diversify or just park their USDT with us and do some wealth management over there. So we as an exchange, we of course offer trading, but we also offer many other services like wealth management. For VIP clients, for institutional clients, I see that as a very key product offering for them. But if we are moving back to tokenized US stocks, even if Ondo has issued more than 200 tokenized US stocks, and we have already listed all of them, about 80% of the trading volume come from only 10 stocks or ETFs, including NVIDIA, Tesla, or QQQ as an ETF, as well as silver. So these large asset classes are still dominating users' trading behavior.
Gracie, I really am impressed when I look at BitCat how much you guys have embraced social trading, right? So whether it's copy trading of well-known people, whether it's kind of utilizing AI agents to help plan your portfolio. There's been a lot of conversation in the last couple of weeks about these agentic agents, and I'm just wondering, in your vision, in the future, should any of us actually be trading as humans, or should we really let the machines do what they do best?
That's a good question. As a user myself, I definitely use AI a lot, but not mainly as a trading bot, although we offer that service to our users. But for me, I still trust human more than AI as an individual user. But as an exchange CEO, we do see the trends of users being very interested in understanding how AI agents is helping them to, number one, collect information and understand what's happening on a daily basis from different sources. And then also place some orders. Right now, for example, BitGet offers Get Agent, which is our AI crypto advisory, or not just a helper, but more on like their partner on crypto trading. So lots of users are demanding for using this, for example, for free or more quota, because like the per transaction for us is quite costly. So we have like a limitation of 10 for normal users, maybe 50 for our VIP clients. But again, lots of users are experimenting with that, and Get Agent can not only help you collect information, but also place trades. And then, in my opinion, AI is going to be very important for crypto industry and especially exchange business for the upcoming, not just this year, but 3 or 5 years. It's just a trend of using this technology to be more efficient, to operate better. For us, we've already had like 20 different plus departments using AI in different ways. Some are more like a knowledge tank for them to gather information. Some are like Get Agent, crypto advisor for users. I even have something like an internal project we're cooking right now called Gracie AI. So we are putting all the knowledge and all my materials, external like interview, or for example, this one will be added to our Gracie AI so that Gracie AI can help Gracie answer all these questions with our users.
Well, we hope that the next time you join our show, it is still you and not Gracie AI.
Yes, let's do that.
Gracie, thank you so much for joining us. It's always a pleasure.
Thank you for having me.
Thank you, Gracie.
That was BitGet CEO Gracie Chen. Sam, I know that you are on top of the news when it comes to what's going on with AI. I know that you're very interested in it. You've asked about this, about incorporating AI into trading to many of our guests over the past few months. Have you used an AI bot for any type of trades?
I have. I've used it on a couple different platforms, more just wanted to experiment. What's interesting is you get very similar results that you also see in the influencer space, which is someone will create a bot, and that bot will do 100x, and then everyone just goes to copy their model when the price is already high, and then you've kind of lost that opportunity. Where I think AI can truly happen is to try to help identify those before they have their pop.
Right.
I just don't have the time to sit in front of my computer all day and do it, so I'm interested in how it would work. I am wary, because we've all seen kind of the AI slop out there, that most people are still going to end up getting the sort of short end of it, because they're not going to be ahead of those who are really hyper technical.
Right. Right. All right. Well, let's bring in our next guest, a very special person named Andy Bear.
Andy
Hello.
Bear.
Hey, Andy.
Good afternoon.
Sit up straight here now that I have such esteemed company.
Andy, you're going to be joining me for the second half of the show. Sam is going to go off and wander in the crowd, but you've been out talking to people, experiencing the Ondo Summit. You were here with us last year.
Yes.
Give us a little lay of the land. What's going on out there?
This is a unique place because it's very business forward, right? The dress code on the invitations, the surroundings, the room, it's unabashedly Wall Street, unapologetically. And I think that that's an important signal from the company. It's interesting to see that that's continued from last year to this year. From tone, tokenization is the word that has to appear in every sentence, right? And this perceived or hopefully growing demand for trading of tokenized instruments is infused through every conversation. So a lot's being built around that. I'm seeing a lot of the guests we have this afternoon are going to focus on that thread. All the way through, from trade experience to the plumbing of settlement to everything. So I'm very excited. I think this really is at the exact meeting point, the very precipice of the bridge between decentralized finance and traditional ways of doing things.
Andy, I feel like you follow these technologies as much as you follow the market. You come from the trading side, you really understand this business. When we look around and we see tokenize everything,
yep.
Do you think that the average person at home even understands what that is, or like what's the education gap we need to fill?
Oh gosh, yeah. I mean, and it begs the broader question of how much demand is all this building going to meet, and who are these people, and what basements are they sitting in? Right? They're always sitting in basements. So, look, I think in the end, a lot of the experience is not abstracted enough to be delightful and simple, right? We're not at ATM or simple iPhone or iPod level, point and click yet for that experience that's going to deliver the exhilaration of trading, that Robinhood moment or that sort of MetaMask moment. I think that we'll get there. I'm really, really curious, does the world outside or maybe inside the United States really want to trade Apple shares on nights and weekends, and how much? And will that be a liquid market? Does it threaten the traditional market, or does it supplement it? And will that be a lasting affection of trading, or will that just be the kind of thing that swells up and down with price movements? One of the most startling is a word I use intentionally, is how quickly the mood and the Pokemon crowd can shift, right? From Bitcoin to gold to silver to copper to land. And that's been quite a splash of cold water on the face of the crypto industry this year. So will that happen with tokenized products too? And then the big threat is, does liquidity go down below a level which it needs to sustain to remain vibrant? So we're really loading up the trading community with a lot of responsibility here to maintain liquidity on a lot of different fronts. The question is, will they be able to do it?
All right, we're going to continue the conversation right here at the desk from the Ondo Summit. But first, we're going to take a quick break, and we'll be right back. Hey everyone, welcome back to CoinDesk Live. If you're just joining us, we are at the Ondo Summit, coming to you from New York City. I'm Jen Sanasi. Sam Ewan is gone, but I am now joined by Andy Bear. Andy, you and I co-host Markets Outlook sometimes.
First of all, let's talk about your blazer
I
here.
love co-hosting with you. Andy loves my blazer. Welcome to the fun half of the show, everyone.
I think that you look spectacular, and it suits the crowd. So
thanks, Andy.
You brought it.
You know I love an on-air compliment. I love your tie.
Blush. Thanks. It's what is it today? Blue, right?
It's blue with some red dots.
Yeah.
Last time,
Serious.
Andy and I co-hosted a CoinDesk Live together. You folks at home influenced the color of Andy's tie.
You did.
Unfortunately, you don't have the opportunity to do that this time because we're not going to be here tomorrow. But I love it. I love talking a little bit of fashion with you.
Blue with red dots.
Well, you know, it's not often we come to a crypto conference and everyone is in a suit. Last year, you and I pointed this out.
Yep.
We said it really indicates a maturation of the space. I'm looking at a sign here right behind you. It says bringing Wall Street to the world.
Yeah.
You were just talking to us about, you know, do people want to trade US stocks 24/7? And I think that was a really good point. That is something that I guess we have to wait and see.
Yeah, the thing about trading stocks 24/7 is you kind of have to trade them all 24 and all 7 over and over and over again. And it can't be a mood, it has to be a trend, and it has to set in place. I think crypto has done a brilliant job of proving that 24/7 trading of assets can be sustained over 16, 17, 18 years. But really, that's concentrated in a pretty small number. When we look at our top 100 tokens in our indices, you really have to look pretty far to make sure you get enough liquidity. Add 5,000 stocks, things need to be trading a lot for trust in the market to be sustained.
We started the show, Sam and I, talking a little bit about markets this morning. I would love to get your perspective. You know, we look up there, sea of red, really looks like people are focusing on gold and silver at the moment. What is this telling you about where we are?
It feels like people are getting out of the way, right? I think that as we got into the fourth quarter of last year, we were aware of a lot of overhang of a lot of supply that came on the market, and Bitcoin sort of started ramming things down. All of the slow money talk about M&A and Ethereum and stable coins and tokenization continued to be very strong, but the fast money was diverted elsewhere into precious metals, into hardware and software stocks, into the sidelines, into yield products. And in the meantime, we just had this relentless bear market fourth quarter. Now we seem to be in another phase where people are getting out of the way even more. I love what Tom Lee said this morning. It feels like people have tried to anticipate cyclical behavior. That's great, because when they've anticipated and it's done, it means the bottom is in and then things can resume. So overall, this too shall pass, but right now it feels pretty cold inside and outside.
The conversation has been really institutional, both on our show and here. How are you? Are you thinking about retail? What's going on with retail? Are they coming back? What's going to entice retail back onto the scene? Are they just going to go to prediction markets?
Prediction markets, gosh. Well, for one thing, just like there's going to be a lot of tokenized stocks available on blockchains to people around the world, there's going to be a new slew, a new generation, a new class of ETFs that will launch in the United States, some on indices, some of our indices. We're very proud to think about those, but also in single names. Those require trading volume. People really need to be interested and keep those volumes going high for those ETFs to be successful and to accumulate AUM over time. So certainly there will be no lack of opportunity to express themselves and get some trading serotonin going. We'll have to see if the market wants to steer itself into this direction.
I think there's no better guest to welcome into the show at this point.
This is exciting.
Yes, they call him the Larry David of investing, but Howard Lindzon has spent 20 years being right about things before they were cool. From the cash tag to the rise of Robinhood, in 2026, he's watching the degenerate economy go mainstream through prediction markets and AI. CEO of StockTwits joins us now. Howard Lindzon, welcome to the show.
It's a good intro.
That was a good one, right? I wrote it myself.
Thank you.
All right, I mentioned the degenerate economy. Just kind of lay a foundation for us. What does the degenerate economy mean in 2026?
Well, we used to have the sin economy, which was tobacco and booze, maybe guns, and now we've, like anything in this world, we've taken it to the next level. Probably free time, the cloud, app store, phones. So what degenerate economy is just this next stage of this, from cigarettes became vaping, casinos became DraftKings became prediction markets, E-Trade, not a big jump to become Robinhood, but the mobile phone, et cetera. And so there's this huge economy, I don't mean to degrade it because I live it, that has been built. CME, NYSC, well, that's the same. CME, NYC, CBOE. They're in the degenerate economy. They're arms. They are the market makers. Thank goodness they exist for this economy. But then you have Philip Morris, which is back because of Zyn. You have Coinbase, Robinhood, so Uber, DoorDash. These are things that our kids live on. I have two degenerates myself, 26 and 28. They're not bad kids, they're great kids. But they live in this economy, and so it's a little bit different for everybody. So it's more of a catch-all that's caught on, but I don't think it's a negative term. But like any economy, there can be good, bad, and ugly. And that's the degenerate economy as well, and we're seeing it. We're seeing all kinds of bad behavior, and we're seeing all kinds of excess supply. So that's the economy.
One of the great things about StockTwits is you have 20 years now of out-of-sample data, and you have whoever were the degenerate equivalents 20 years ago are 20 years older, right? You can't manufacture a 20-year-old, you have to grow one. So are those people, now that they have families, kids, houses, are they different? Are they still hunting that same serotonin fix? Are they sticking with you? Have they moved on? And what do they want?
It's like anything, right? Social's changed so much. So basically, the Twitter box, the StockTwits box have become a prompt, really, so the world continues to evolve. The best trader's journal. So in the end, StockTwits was an idea in the cash tag, so I like to journal. Couple things different than Twitter. We don't let people delete their messages, and we don't jumble up the timeline. Not for everybody, but like very pure to what Twitter used to be. But more importantly, what's changed the most is, people get older, but those people that just get used to looking at prices and being just in tune with the tape, they love StockTwits, they love Twitter. The biggest change has been research, right? For 100 years, research was, the alpha was in the people that would be on the streets gathering this data. In a world of Claude and OpenAI, research has kind of been commoditized, right? If you can trust the data, we're investors in one company, Fiscal.ai, but if you can trust the data, and again, I'm not the expert here, but people are cleaning the data and washing the data, you just put everything that mattered on Wall Street behind the Chinese wall into a commoditized. So if you want a research report immediately after earnings, written with a bull bear case and scanning the internet with everything that you should know about Philip Morris or Hims or whatever it is that stock you want, you can get that.
Right.
And so the only difference becomes the sentiment, who you're following, the edges change. And so with StockTwits, we have this incredible data. I grew up with Investors Business Daily, and I'm a momentum investor, and relative strength is what I understood. Price relative strength, and IBD owns this idea of stack ranking stocks with the highest price relative strength, from 99 to 1. I think it's fantastic. What StockTwits can do differently, and what we're building, and if people know how to use it, they can do it themselves right now, is a social relative strength, meaning I prefer to buy stocks with very high price relative strength that are underfollowed. And by stack ranking tickers based on who's following them, I want to own SanDisk over NVIDIA, because if SanDisk is breaking out and has nobody following it, and it's a similar industry, that's a signal. And it's a signal in the sense that so many people on StockTwits are focused on these things and yet still miss what's coming next. And so it's kind of like a flip in your brain. You say, well, shouldn't StockTwits know? Shouldn't retail know what's coming next? And I like to think it's like Vegas has the moosh, which is like, they know when you're coming, the bad investors coming, and they give you they give you the room, they give you the food, because they know you're going to lose money. Retail has always been this reputation of being the moosh. And now with tools like StockTwits, even if the community can be the moosh, if you know how to read the data, you can find the next NVIDIA. And so I love that idea. I love the fact that people with AI and with all the technology we built can get research, stuff that used to be behind the research walls. And so it's really never been a better time to be an investor.
I have a follow-up question on that point. One of the great things about tokenized assets, prediction markets, and just crypto in general and ETFs is you have 5 different ways, maybe 10 different ways to buy the same asset.
Yeah.
And the people who come in at those different times come in sequentially. Right?
Yes.
Last spring, we saw we saw a short squeeze in Ethereum.
Yeah.
And then that led to ETF inflows. And then that led into more buying.
Yeah.
So not only as a momentum investor, you'll see that the core of momentum, right, is that new people learn about information at different times.
Yes.
And they come in, that's why you can bank on a trend.
Yes.
Will more and more varieties of the same asset being tradable in different markets and different spaces continue to enhance trend investing?
Well, it'll enhance volatility. So the perfect example, we went from a world of globalization to a world of deglobalization. Now people really, and we call it debasement, we can call it whatever, we can call it borders, but it's obvious, right? We like China and Canada and the US, we don't like China, Canada, and the US. So the walls are going up. When the walls go up, things happen. I assume what happened, crypto, because it was easier to buy, front run gold and silver and commodities, right? You could buy ETFs from Bitcoin, and that front run, everybody believed that that was the debasement trade, right? Including, and the retail was first there. But retail probably was slow to realize is Wall Street moved on this one probably because the debasement trade became broader. Meaning, if you're going to put walls up around your border, companies are going to start hoarding a lot more than Bitcoin. They're going to start, relying on defense in Europe. They're going to, European companies are going to have to do certain, everybody's behaving differently. And in America, people are starting to hoard. And the problem with gold, silver, everybody's looking over here, and there's only 5 or 6 ways to trade gold and silver for that same retail investor that we gave 1,000 ways to buy Bitcoin. So what you're saying is they're learning and they discover a new thing, silver and gold, and then they crowd in through SLV and SI, and I saw it happen on StockTwits, and you can get in front of these things. Investors aren't dumb. They just are learning, right? There's hundreds of millions of people that have been onboarded since COVID to this game that is the market. So we can assume 2 things. It's never been a better time to start investing. It's never been a harder time to stay invested. And for those people that want to stay invested and be in the business, they're going to have to learn how money moves and how the actual economy works and how politics, unfortunately macro is kind of hard to do and I don't recommend it, but certain themes are impossible to ignore around macro. And I think this move to debasement has just spread beyond Bitcoin, and there's just not enough ways to access those things, and now people, even if they don't really understand the gold silver trade or graphite or steel, they want it. And they're selling the other debasement trade. So, I mean, that's one thesis I have about that.
During the first half of the show, we spoke a lot about AI and AI agents and how it's going to enhance trading, or maybe not. How are you looking at the headlines that are coming out now about these social networks that are completely occupied by AI agents who are creating their own communities? How is that going to change the retail trading experience, do you think?
A lot. I mean, it's so new. And I'm 60, so I'm like, I could die at any moment, so it's hard to keep up with all this stuff. But I call it the degenerate economy, but I also say speculation has become entertainment. So to me, I think the thing is, should I be on YouTube watching 60 strategies traded? Like the Bloomberg crowd and the Yahoo Finance crowd and the Twitter crowd, we grew up watching people talk and stock prices move. In 5 years, I can imagine a wall here with 60 autonomous ETFs running based on risk profile, and you can just by themes, meaning the machines will play the machines. Do we have to have people building ETFs, or can machines running, researching on Claude and running relative strength and price relative strength and all the sentiment out there, they're going to be able to run this stuff faster. So in a world where I have a theme idea, right now it's like type it into Robinhood or Public or StockTwits and figure out a theme. In the next theme, it'll be 30 screens up there and you say, I got 100 grand to invest for the next hour. It's too slow if people were building this, so I would just go watch AI ETFs battling against each other and do that. So I think it becomes more, the way that you can lean back and watch this stuff happen is much better than just staring at a phone and looking at 6 ticker symbols. I think the markets are much more complicated than FANG. Maybe not, but I think they are much more complicated, and we're seeing this with Bitcoin and gold and silver. I think they're much more complicated than just 7 stocks on your mobile phone. So I think investing is much more of a lean back experience, and I think this is good. It's going to be painful for some people. And so you have to build new UIs, you have to find teams that know how to live with this stuff, and then you need have founders and people that understand the markets and strategy, because we squeezed the world down into an iPhone. And the peak moment of staring at your iPhone was during COVID, when everybody had a buy-sell GME, you had GameStop, and the whole world looked at one ticker for about a day or 10 days. Guess what happened? Everybody clicked green or red, and in the old days, if you were playing pinball, it would say tilt, and the game would stop, and you'd be out at 25 cents. When the perfected UI of getting everybody to look at one screen at the right time during COVID, it broke the market. Everybody, GameStop went whatever, broke hedge funds, etc. We are now unwinding all that trade. The unintended consequences is people just learn that that's fire.
Yeah.
Like, that's funny, but it's not funny. And so the markets need to be digested, right? And I think we're at the beginning phases of, we squeeze the world into one screen, and now the markets are to be enjoyed and understood from many screens. And so that's the way the world's headed. So autonomous makes sense, because I need to look at 60 different themes, and I need those things to constantly be updating my models. And humans can't do that. Good story?
That was a great story. And Howard, unfortunately, we got to leave it on that note. Thank you so much for joining us at the desk, and we'll see you around the summit.
Okay.
Thank you.
See you.
That was StockTwit CEO Howard Linzon.
We could have done that all afternoon.
We really could have done that all afternoon. How are you thinking about AI, Andy?
People are people, and having somebody who's been educating and working with short-term investors for 20 years makes me always think that things are as much the same as they were. I think very, very few things have changed. The impulse, the cognitive biases are the same, risk aversion is the same, the tools are better, the horizons might be shorter. Look, the best investor in our household is my son, who's 17, who had a college account set up when he was born. He's blown everybody else away by buying and holding for 18 years. So we all have to remember to fight against some of these fun impulses and realize how expensive short-term investing can be when you can just buy Bitcoin and hold it forever. So anyway, not investment advice, but just an observation.
A nice little anecdote from Andy there. If you're just joining us, we are coming to you from the Ondo Summit in New York City. We are going to bring our next guest in right now. Nadine Shakar is the managing director.
Still waiting for Kim.
Oh, all right. You know what? We are going to take a break. We'll be right back. Welcome back. We've got it all figured out now. We are coming to you from the Ondo Summit in New York City. I'd like to welcome our next guest. Nadine Shakar is the Managing Director and Global Head at DTCC Digital Assets, and Kim Hodgfield is the Global Head of Digital and Cash at State Street Investment Management. Welcome to you both.
Thank you for having us.
Thanks for being here. We're here at the Ondo Summit in New York City, like I just mentioned. Talk to us a little bit about the conversations you've been having around the summit and what it means to be at this point in the industry. We'll start with you, Nadine.
It's a great time to be alive, as they say. Tokenization is the topic du jour, not just at this conference, but everywhere in the industry. And it's really starting to feel real. We've been talking about this for so long that we're seeing really good traction, adoption, real projects coming to life, and those are the conversations we're having.
Kim?
Yeah, I echo Nadine's excitement. There's a palpable sense of energy and a can-do attitude in the room. I think there's been a huge shift in the last year. The regulatory environment has been transformational, and you're really seeing organizations like ours and DTCC building on new rails and transforming financial infrastructure.
This is one of my favorite conversations because it's less about getting retail people in basements around the world to trade Apple shares at 3 in the morning on Sunday, which is going to happen, right? Yeah, I know, they're always in basements, it's always 3 a.m. This is about building the plumbing, right? And this is about projects that have defined characteristics, that have real demand curves behind them. Where do you feel the pull coming from? Like, do you wake up on a Monday and saying, I'm building this stuff and gosh, I hope that we're on the right track here, or do you really feel as if you're part of a tidal shift where you feel some current behind you? Nadine, maybe I can start with you on that question.
It's more than plumbing, right? It's really building the infrastructure for the next couple of decades that are going to come. And it's a little bit of both, right? There's a little bit of, if you build it, they will come. But as we said earlier, there's also a big shift right now where clients in the market are starting to see the value of digital technology, the new rails, tokenization, and sometimes you've got to lead the way a little bit. And this is what we did at DTCC. We tried last year with a collateral experiment. So we showed people the value of once you tokenize your assets, you can move collateral at the speed of the network anywhere, anytime, whether it's 2 o'clock in the morning or 2 o'clock in the afternoon. So, and that started to capture people's imagination to say, okay, hold on, I can do things better, faster, cheaper, I can make things more efficient, I can open up the aperture of my investment strategies to people that historically wouldn't be able to afford these type of instruments. And that's what it's all about right now, at least for us at DTCC, really try to reimagine what the market infrastructure will be, and that's where we're heading.
Kim, I worked at investment banks before, during, and after the financial crisis, and obviously the biggest change was, oh yeah, we really paid better attention to collateral movements, right? Balance sheet isn't free anymore, and we have to make sure that our collateral is what it's supposed to be and that it can move freely and that it's enhanced as much as possible. This is now a business, not a back office function. Is that one of the bigger drivers of this, the speed of collateral movement?
Absolutely. This is not a solution looking for a problem. This is a problem and a challenge that's been a challenge for a long time. And tokenization is solving a lot of the challenges around collateral management. So the 24/7 nature, the atomic settlement, the programmable smart contracts. I mean, this is going to be transformative for collateral management, transformative for balance sheets, transformative for more efficient capital management for anybody who's managing cash and collateral on their balance sheet. So.
Go on, please.
Oh, okay. Nadine, I wanted to talk to you about the SEC no action letter that the DTCC received at the end of last year. How has this changed the internal rhythm at the DTCC? And how much are you watching and waiting for this pending market structure legislation passed in the US to continue moving forward?
That's a great question. So the no action letter that we received from the SEC was really a big deal. It's historic in nature, and it's giving us the license right now to look at tokenizing. I think we hold 1.4 million CUSIPs, 100 trillion in custody, and it's really the starting point for us to start to tokenize the US markets to move this forward. I think you're referring to the Clarity Act. That's only going to give us more clarity, no pun intended. You've got the Genius Act, but the regulators themselves are being incredibly proactive, really helping think through solutions with the depositories, which DTCC is, firms like State Street, to how to move the markets together. Because this is at this point right now, it's an issue of adoption and truly integration into really getting the old and the new to work until someday we'll just be operating 100% on new digital rails. So we've got the license, if you will, from the SEC to go out to be innovative. I think within DTCC, we've never run any faster, which is great. We're innovating with speed, but with purpose. And hopefully in the second half of this year, you're going to start to see the output of what this freedom has given us, if you will, or permission from the SEC to start to provide tokenization as a service to get our collateral app chains up and running, for everybody in this room here to be able to exchange collateral freely, use any type of instruments that they'd want. So Kim is big on money market funds, to be able to use money market funds as collateral, stable coins, tokenized deposits. We're building the infrastructure to provide that financial freedom.
Kim, I want to say you have 3 bites at the apple, right? Because first of all, if you can tokenize your money market funds and enhance on-chain collateral, that's one. 2, you can tokenize other investment assets that people are going to like, which will help in trading and help in fluidity. But you also have digital assets that you can bring on, right? You can put the new wine in the old bottles and think about how are my clients going to introduce real Bitcoin, real Ethereum, unwrapped. How do you balance those 3? Are they 3 different? Are you ignoring any one of them? Do you consider the 3 of those things within your mandate?
I mean, I think those are 3 key pillars. We're one of the world's largest investment managers. We pride ourselves of offering a full range of investment solutions for our clients. So, giving our clients the opportunity to invest in this new market infrastructure and in cryptocurrencies is something we're working on. But also then the whole tokenization angle and what that's doing to transform existing investment capabilities and broaden our investor base, both with traditional investors, but bringing new investors into our world. So very much 3 pillars. We're balancing them all. There are not enough hours in the day. I still need to sleep. But yeah, hugely exciting as we work on all those 3. Yeah, and I'd also add, we look at some of the market volatility over the weekend, which makes one of those pillars a little shakier than some of the others, but so that's what's really exciting about this space. We have a number of initiatives to work on.
Oh, it's a great time for market volatility. You get to, all your risk models will have nice, fresh data sets to work with, and you'll have Bitcoin volatility behaving more like equities, which is healthy, and your credit officers can say, like, good, I don't have to go back farther.
Yeah, but I think as institutions, we also have to separate what's happening in the cryptocurrency markets to what Nadine and I are doing in terms of the infrastructure. So yes, everything's running on the same rails, but they're very different aspects of those digital rails. So
blockchains, are you trying to prepare for worlds where Ethereum remains your primary blockchain, or semi-privates like working with the folks here at Ondo for interoperability, or Canton, or Solana? How are you thinking about not dictating, but being ready for whatever blockchain ends up being the one that people want to use, or are you going to declare that and force people to follow?
We go where our clients take us, so to your question, it's all of the above. I think you're going to see a combination of private and public, permissioned and not. And what we're trying to do is build optionality for our clients, so we're going where there's liquidity, building orchestration layers on top, so we can allow clients to pretty much move their assets wherever they want to, anytime they want to. So optionality is key, interoperability is key, and it's a word that's, we throw that our way very loosely. Right now we've got interconnectivity, but we are all as an industry trying to push towards interoperability. I don't believe, this is my personal view, that there will not be one chain to rule them all, but it'll be an interconnected, interoperable setup, if you will, that would allow wallets and assets to move freely.
Interesting. Kim, I see you nodding. You agree with that? Multi-chain world?
Absolutely. And again, as a product manufacturer, we want to have our products available in as wide a fora as possible. So we will be building products that can fit onto a variety of different chains. Absolutely.
All right, we got to leave it there. Nadine, Kim, thank you so much for joining us at the desk. It was a pleasure.
Thank you both.
Thank you.
That was Nadine Chekar from the DTCC and Kim Hodgfield from State Street. We're going to take a quick break. We'll be right back.
Thank you, guys.
Thanks, Nadine. Nice to meet you.
everyone. Welcome back to CoinDesk Live. We are coming to you from the Ondo Summit in New York City. I'm Jen Sanasi, here with my co-host Andy Baer, and we're now joined at the desk by Ondo Finance's Vice Chairman Patrick McHenry. Chairman, great to see you again.
Hey, great to be back.
Yeah, great. So the last time we spoke, actually this is a lie, we spoke in between, but we saw you at the Ondo Summit last year.
Last year, yeah.
You were just joining.
Yep.
Talk to us about the last year. What have you been up to? Give us the highlights.
Well, the highlights for Ondo is that we've taken global markets and we're able to bring it back to the United States. That's a substantial change that the Trump administration has opened up for American investors to have new opportunities. It also means that the United States is emerging as the crypto capital of the world, just as the president outlined. And it's being done not just with crypto native assets, but traditional securities being brought on chain, and we're getting all the value out of that. And thankfully, Ondo has been at the lead. And the market structure regulatorily has not changed, but the market is speaking about the Ondo products. And Ondo's emerged as the global leader in bringing real-world assets on chain. And we hope the next year is going to be even more so.
Oh, sorry, go ahead.
No, that's okay, Andy. We had Patrick Witt at the desk earlier today. We were talking about market structure legislation, talking a little bit about the meeting that happened yesterday. I've asked you this before, but how much FOMO do you have watching all of this happen?
So what I'm excited about is it's actually getting done. We got so close on stable coins, so close on market structure. We actually produced these big votes in the House when I was chairman. But French Hill's done a fantastic job. And I think both the House and Senate and the White House has enabled a massive change in policy. And I'm glad to see it. I'm really glad to see it. I didn't think it was going to happen so fast. Genius happened so fast.
Well, when I spoke to you last year, you told me this moves very slowly. It could take a very long time, and then it happened like that.
But I'm half right, because market structure has been really slow and very complicated. Thankfully, we have people like Patrick Witt at the White House that are pulling on this, and the president's prioritized market structure. But it's going to be a tough thing to get this yield question resolved and get a compromise.
So the legislation is important, but as someone who always felt like our regulatory agency should have been merged after the financial crisis, when you hear harmonization between the SEC and CFTC, a message that was just repeated recently, isn't that just a good feeling? Like, doesn't that help the rest of the financial services industry?
So if you're regulated by the CFTC and of long standing, you're concerned about the chief of staff for the chair of the SEC coming over to the CFTC. You don't like that. But for those of us that look at these agencies and say they should actually work together, this makes complete sense.
Right.
And the fact that Selig is so adept and capable, it's a great boon for the agency, it's a great boon for crypto, and a really fantastic thing for America and our competitiveness, our market competitiveness.
When you think about how retail investors generally behave in the United States, a lot more people have brokerage accounts than futures accounts, right? People don't usually have their retail investing and trading activity regulated by the CFTC. That would be a big change. That feels like that's going to take a while, right?
Yeah, that takes a while, but the harmonization question is of major substance. The idea that you would have a stablecoin regime, a securities regime, and a commodities regime, and therefore have to have three apps to do one thing, is really stupid. Like, it's just bad public policy, doesn't make sense to the marketplace. It's not good for consumer behavior and choice. And so harmonization between those three products makes a lot of sense, and actually know that you have fit-for-purpose regulation of those three products standing next to each other on the same screen has been the goal since before Dodd-Frank, but certainly after Dodd-Frank more so.
Now, you've pointed out correctly, Ondo's been in the lead when it comes to wrapping up traditional products and getting them to be available elsewhere. What about things coming the other way? What about things like DeFi yield, crypto native stuff, or blockchain native forms of finance that we also want US investors to have access to, but also consumer protection?
Well, DeFi is without without a proper approach to DeFi, we're not going to have a market structure bill. Plain and simple. The benefit of crypto is born out of decentralization, and without DeFi, decentralization cannot actually meet its full potential. And this is traditional stuff in a securities market, but put in a digitally native way, approach that is faster, better, cheaper, and therefore will cost you less to actually get lending. We're seeing this bear out on tokenized products versus traditionally regulated securities products. The lending on the tokenized product being cheaper than the lending on your traditional security. So the market's speaking on this in a major way. That's why these Ondo products that have been global products are coming onshore, because there's a major demand for being able to trade 24/7 in a digitally native property and get all the benefits of crypto on these with these other traditional products matched up.
Do you think we're going to get market structure by midterms? You bring up DeFi. We spoke a little bit about the stablecoin yield conversation that's happening between the exchanges and the banking association. And then there's this question of ethics. The Wall Street Journal published an article yesterday bringing the president and his family's ethics concerns around their crypto deals back into the spotlight. Do you think we get to common ground on those three things before midterms?
I mean, but for that, Mrs. Lincoln, how was the theater? I mean, there's a lot to unpack there. There are all these massive headwinds by TradFi against crypto getting normalized and getting regulatory clarity. So that's one force at play here that is enabling all these other forces, all these other things you've mentioned, to have more impact on restraining the legislative branch from acting. I think we not only get a market structure bill before the midterms, I think we get a market structure bill before Memorial Day. And I think the Senate will act before Easter. I think it comes together. There's a major emphasis on this. What we saw, you heard from Patrick Witt, about the group he brought together on yield. Crypto came in and said, look, we want to negotiate. We actually want a reasonable compromise here and a reasonable approach to yield. And the bank sat there and listened and offered nothing. Well, that's not going to last long in Washington if the group that is holding it up, the banking industry, is unwilling to negotiate on something that has to be resolved to unlock market structure. It will be resolved. It's going to be rough going, but it's going to be the president will have a bill signing ceremony on market structure, on clarity, before Memorial Day.
Ooh, that's a bold prediction.
That's a headline.
Well, look, if Kalshi were here, I think I would put a few bucks on that.
I think we could probably find a prediction market for you to put a few bucks on. We got to let you go, but I mean that was yield. What about ethics and DeFi? Do you think that?
Look, without DeFi, you don't have market structure. Without DeFi, you don't actually have crypto. Without DeFi, you don't actually like all the benefit of crypto is negated without some understanding of the properties of this. What policymakers need to understand is that crypto is unlike TradFi. You can actually see what's happening. You can see it for yourself, and that is its own regulator. And so the market participants can see and can act in accordance with real information, unlike what we had in the financial crisis and what led to the financial crisis. Opaque markets, which actually begat more and more pain during the financial crisis. The clarity here is in the blockchain and that builds market discipline. That means you can have DeFi and market participants know what's going on, number one. Number two, on ethics, this shouldn't be it shouldn't be about one person for a short period of time. It should be about permanent policy for all governmental officials. I think you can resolve that. I think you can resolve that in a way sufficient for Democratic members to be able to vote for a market structure bill. I'm optimistic about that.
Chairman, thank you so much for joining us
Thanks,
at the
Jen.
desk. As always, it's a pleasure.
Thank you.
Thank you.
Thanks, Andy.
That was Ondo Finance Vice Chairman and former Congressman Patrick McHenry. We're going to take a quick break. We will be right back. welcome back to CoinDesk Live. Our next guest joins us now, Rune Christensen. Rune is director of the Sky Frontier Foundation and co-founder of Sky, formerly known as MakerDAO. Sky is a DeFi protocol that scales the legacy of MakerDAO by bridging decentralized governance with institutional grade stablecoin rewards and real world asset allocation. Rune, welcome.
Thanks for having me.
Of course, thanks for being here. I've been waiting to talk to you all day because I've really been following this AI agents on social media boom that's been happening over the past few days with Moltbook. And you acknowledged on X that people are freaked out by this, but you said that Sky has been preparing for this all along. Kind of unpack that for me.
Well, so Sky, first of all, is the world's largest yield-generating stablecoin project. And actually, the way that Sky is able to deliver such a great and efficient risk-adjusted return on the USDS stablecoin is through what's known as the Sky agents, which is essentially merging economics and finance with AI agents and governance. So that's the kind of the whole history of Maker that led to the creation of Sky. And I mean, what it really means in practice is just, the ability to securely and safely and efficiently deliver good returns, deploy with good risk management into collateral assets, and then even also deal with the coordination problem of agents and how to basically make sure that everything works out. So it all sort of nicely fits together, and I think it's really cool to finally see the broader interest in agents and sort of ecosystem of agents working together.
I guess, do you see this as a standard that you would like to see adopted generally, your approach, or is it, hey, we have a competing way to do this and we'd like to attract your assets to us because this is how we deliver yield and we think you'll trust it and believe in it, and if you want other stable coins you can go elsewhere, but if you want this package, come to us? Is it that you're trying to set a standard, or you're trying to compete and have your product stand on its own?
I mean, look, all capital, all finance wants efficiency. And there's simply no doubt that the way to deliver efficiency is to tap into the latest technology, and that's really AI at this point, and agentic finance. So I think this is absolutely going to get developed and adopted across the industry, but I think what Sky really has to offer is just a very mature ecosystem and a lot of building blocks that others can tap into rather than reinventing the wheel. And I think generally we're seeing that, right? So USDS doubled in supply in the last year as you have a lot of momentum, a lot of capital moving into Sky and USDS. We're working in Sky with some of the largest institutions. The collateral right now is backed by assets from BlackRock, BNY Mellon, Janus Henderson, and this is actually done through these Sky agents. So essentially you have these like individual agents powered by Sky striking deals with, for instance, Janus Henderson to do the first ever tokenized CLO. And that was a really good example of how, by opening up for basically more autonomy in how a large financial ecosystem like Sky can operate, you can get better diversification, and then through that unlock some efficiency gains, right? Where you have CLOs, if included in a portfolio the right way, they can increase return without impacting the risk profile.
Interesting. And so, how scalable is all that? When you see the space, the entire size of the space that you're approaching, doubling assets is incredible. Can you go up 10 times from here?
Yeah. So I mean, if you just look at the stablecoin space today, there is more than 300 billion in stablecoins not earning any yield or earning a very inefficient yield right now. And capital wants to generate returns. So in Sky, we really consider all of these sort of more simple, centralized stablecoins as top of the funnel, really. This is what's driving the inflows into Sky, where you have capital that's already getting blockchain native, that's already getting a taste of the efficiency you can get with blockchain with stablecoins. But then what you want to go from there is you want the best possible efficiency, and that's what Sky has really been specializing in for the last many years. We actually just released a financial report out of the Sky Frontier Foundation that's making some assumptions around the growth trends, and we're expecting a doubling in supply again over the coming year. But from there, I mean, I would expect it to just grow even further as our agent ecosystem further helps scale just the efficiency and the capabilities of the whole ecosystem.
We're sitting here at the beginning of February. You just mentioned your report. Talk to us about the headline of that report. How are you expecting the rest of 2026 to evolve for the industry and then more specifically Sky?
Yeah, I mean overall we had doubling in supply last year and assuming another doubling in supply over 2026. Really good profits and buyback for Sky with more than 90 million in profits resulting in buyback of the Sky token. That I think also, we're assuming another more than a doubling of the profits over the course of next year. And I think overall, the reality is that, from here, crypto is really getting more and more institutionalized. It's getting more focused on what you can really do with the technology. And as we're seeing, there's sort of a lot of crypto projects, they're kind of in a, they're having a bit of sort of like a lack of what are we supposed to do now, right? But the really big, established DeFi projects, the ones generating revenue like Sky and many of the other blue chip DeFi and really established players in the space, this is actually the moment we've been hoping for all this time. Finally there's less noise and there's more focus on the fundamentals, on revenue, on all these things that should have been totally natural from the beginning. And I think in 2026 that will really just translate into growth and momentum and success for the projects that were focused on this from the beginning.
Rune, thanks so much for joining us at the desk. It was a pleasure chatting with you.
Thanks for having me.
Thanks, Rune.
That was the director of the Sky Frontier Foundation and co-founder of Sky, Rune Christensen. All right, Andy, Rune said something interesting. He said there's less noise.
And not in this room.
Not in this room.
This is
Physically,
a noisy room.
there is more
I like
noise
it.
for
I like
us.
people in suits talking. It's good.
but the industry has less noise, and I think that that was a pertinent point.
Oh, there's big fundamental difference here, right? If I have a dollar bill, it's not a chia pet. It's not sprouting yield out of itself. I have to put it in a bank or buy a money market fund or buy a treasury. The idea here is that you have USDS, it should inherently have yield into it because it's backed with yield-bearing instruments and they try to optimize against risk, and it's a whole different proposition. So it almost belongs on a different part of the balance sheet, and it'll be very exciting to see how that develops and if that can ultimately be integrated into the US. So very interesting to watch, especially from, as Rune pointed out, a protocol that's been around a long time.
Yeah. It's interesting. Sam and I were talking about this earlier with innovation, there's disruption, and with disruption, there are old parts of the system that are very reluctant.
Oh my gosh,
to
barnacles.
Yes, to accepting that innovation. And I think that's
right.
reflected in the conversation we had with Chairman McHenry and the conversation Sam and I had earlier with Patrick Witt with the National Bankers Association, really reluctant to this whole idea of stablecoin yield, saying, if folks are able to earn rewards or yield on stablecoin deposits and centralized exchanges, we're going to see immense capital flight. And what's interesting to me is they're not saying we want to change. We want to understand how maybe we can offer something similar to customers.
Sounds good.
We just don't want that money to leave.
There's trillions of excess deposits in banks right now, and they pay almost zero interest, right? So it's been a pretty good deal. Understandable why you'd want to defend that space. But yeah, clearly now any kind of daylight shed on that is gonna receive a pretty swift response. So we'll see what happens with a couple of new stable coins coming in the last couple of weeks from Fidelity and the US safe version from Tether. So it's on, right? It's on.
We'll see what happens. And our next guest, I believe, was involved in the meeting yesterday about exactly what Andy and I are talking about. Summer Mersinger joins us now. She's the CEO of the Blockchain Association and previously served as a commissioner of the CFTC. Summer, welcome back to the show.
Thanks for having me on again.
Yeah, thanks for being here. Now, Andy and I were just talking about the stablecoin yield debate.
Yes.
I believe that you were in the room yesterday.
Yes.
Are you able to give us any insight as to how the conversation went? I know that there was a little bit of a, there was no
there was no agreement.
Yeah, there was no agreement made. But talk to us about how the conversation went.
I think it was a good first start, right? We got us in the room, got crypto and the traditional, the banks talking about this issue, which really had not happened yet. So it was, I'm very happy the White House did this because it really kind of is going to move the ball forward. We're on a tight timeline to get an agreement, but crypto came in force. We were there to negotiate in earnest, and we hope that these meetings, we're going to have more of them, continue to get us closer to the goal line.
Do you get the sense from the banks that anything short of a complete shutdown of this conversation is a loss, or is there any scent of cooperation, of discussion?
I think they recognize that the status quo certainly is not what they want. If the market structure doesn't go through, there will be no change to the rewards. And so, holding up the entire bill on this issue, I think it doesn't put them in a better place. It just maintains what we're doing right now. So I think they know that they have a real interest in doing this, that it is important, and that they need this bill as much as we need this bill.
We've heard only optimism at the desk today when it comes to the passing of the bill this year. Do you share that optimism?
I am optimistic. I think everything that's happening is what needs to happen for a bill to get through the Senate and become law. So, where it looks like things are maybe breaking down, that's actually a good kind of restarting things, everybody talking again. So I think we'll see another Senate banking markup in the near future. And I can see this bill getting to the floor still in Q1.
As a public servant, how exciting is it to see all kinds of people suddenly interested in the legislative process? Because you say that some of this is just the normal bickering that goes on, and don't get too excited about it. You have to walk over hot coals to get to your solution. We might have a whole new, generation of future public servants that are seeing all the excitement.
It has been really cool to see people interested in the legislative process. I look, even within my own team, they really haven't seen how the sausage is made, as we say. And so they're seeing it firsthand. They're learning about how things come together, the work that goes into that. How much goes on behind the scenes. So it is really exciting. As someone who's kind of a legislative nerd, I love that we're talking about it, and I love that people are focused on it.
Now, another thing that I'm surprised a lot of people are talking about is taxes, okay? We have market structure legislation that you said you're optimistic we get passed in Q1. The next big piece of legislation has to do with tax. Do you think that can be passed this year, or do you think that could be passed even before market structure?
I have a good feeling on tax. I think it's kind of the third leg of the stool here. We need a genius, we need market structure, but we do need changes to the tax code so that we can fully allow the markets to develop here in the US. And I think the policymakers recognize that they really have to update the tax code. And so we're seeing a lot of bipartisan support for that, and we're spending a lot of time educating members on what changes need to be made and why. So I feel good about the tax changes, the tax updates happening this year. Again, bipartisan support, and the right people are talking about it and focused on it.
Jen knows this is my favorite personal topic, but the harmonization between the two regulatory agencies, as someone who worked in banking during the financial crisis and kind of wish that there was harmonization since then, is excited to see this, right? How does it feel from having been inside, and is it a natural thing? Should we behave like other countries, or does the CFTC really owe some of its allegiance to some of its other constituents in the agricultural and other communities? What's the right outcome for regulatory harmonization?
Yeah, I used to get this question a lot when I was traveling as a commissioner, and people would say, why do you have this bifurcated structure?
Yes.
And I would always say,
good for the lawyers.
Yeah, well, we have the most, we have the deepest, most liquid markets in the world,
right.
So maybe we're doing it right. And that usually kind of tamped down the question, but I do think there's a lot of areas where the two agencies can harmonize. There are some definitions that, need to be harmonized. There are some things, security-based swaps, the way those are defined. So there are a lot of areas where they can really work together and come up with some solutions that have been out there a while. And this is two chairmen who can work closely together. We haven't had that in a while.
Wouldn't it be just bizarre if crypto caused some of the more arcane parts of Dodd-Frank to just have to be canceled out and simplified?
Yeah.
I mean, isn't that an amazing outcome?
Yeah, no, but it is kind of symbolic of what crypto is bringing to traditional finance.
Right, fantastic.
Summer, before we let you go, as you look forward to 2026, what are some of your top priorities at the Blockchain Association, other than getting legislation passed?
Yeah, absolutely. A lot of it is education, making sure that policymakers really understand this industry and how it's developing, and where the technology is headed. We've found with doing this legislation that there is still an education gap, so if we can close that gap and spend time really helping people understand what we do, I think that's the top priority. And then, we just want to keep this conversation in the public eye. I think, it's been this way because of the legislation, but I think we should still recognize the importance of the industry and crypto and where it's going to take finance in the future.
Summer, it's always a pleasure seeing you and chatting with you. Thanks for joining us.
Yeah, thanks for having me on.
Thanks, Summer.
That was Summer Mersinger, CEO of the Blockchain Association. All right, Andy, you and I are trucking right along.
That was fun.
That was super fun, right?
I mean, it's easy to become a legislation nerd when you have legislators and regulators right here in front, and they're in the room, and you can see things happening. The idea that crypto can actually kind of come back and repair some of the things that maybe weren't perfect in the way post-financial crisis regulation was set up is amazing to me. It's just a fantastic demonstration.
I was saying to Sam earlier on today, it wasn't long ago that regulators weren't willing to meet with industry executives. It was really hard for industry executives to get appointments with folks on the Hill, and how much has changed in such little time. It really is exemplified in the conversations we're having here and the conversations that are being had around the summit.
Yes, and even those most optimistic might not have predicted harmonization conversations between the two agencies. That's almost like a bonus point. So what a great room this is, full of people who are really hard at work. It's a full room behind the lights here.
It is a full room. People are having conversations, they're eating snacks, and I think they're going to head back on over to the stage to listen to some of the talks. Our next guest is going to give us a full view of what's been going on at the Ondo Summit and Ondo over the last year. We're joined now by Ondo Finance's president, Ian DeBode. Hey, Ian.
Hi.
Doing double duty today.
Yeah, that's right. Busy day today.
Busy day today. Just maybe you're ready for the top job.
Yeah, maybe, who knows.
All right, we are at the Ondo Summit. Andy and I were here last year. Talk to us about the last year for Ondo. We heard a little bit from Vice Chairman Patrick McHenry, but from your perspective, what's been going on over the last year and how is it culminating at the summit?
Yeah, no, 2025 has been a phenomenal year for Ondo, quite frankly. We are now the #1 in the tokenized treasury category with over $2 billion in TVL. We launched our Ondo Global Markets platform, which is really tokenized stocks and ETFs. That one is coming up on more or less 600 million in TVL, which gives us about 60% market share in that category. We've had partnerships with truly legacy TradFi players, MasterCard, JP Morgan, many, many more. So I think 2025 really is, the year where we were able to both scale the existing products that we have, launch new platforms with tokenized stocks and ETFs, and now really 2026, I think, is really bringing all those pieces together into a larger financial services ecosystem.
You've clearly been skating to where the puck's going to be, right? And it feels like you're aware that there's going to be competition for those end states where there might be a small number of real success stories. I noticed your slide this morning that expanded with the number of partnerships, right? The big reveal slide. I mean, logos are important now, aren't they, right? You really want to mark territory and get people to inherently trust, be emailing in questions. How much of that can be done now, prospectively, with the idea that the revenue and the business model can fill itself in later?
Yeah, I think it is absolutely right now, to your point around the land grab, that is happening, but at the same time, things are still rather friendly, quite frankly, in tokenization. Because you've got all of the legacy TradFi incumbents here, the large asset managers, the banks, the custodians. Everyone is still just trying to get on chain, to build an ecosystem of things that work. I mean, revenue is important, don't get me wrong, but I think right now is much more still about building the pipes. The scale comes after. Because as much as I love having, $2 billion in tokenized treasuries, 600 million in tokenized stocks, that's obviously a drop in the bucket compared to real traditional finance. But I do think the sentiment is that we're starting to get to a point where the pipes are in place. We can really move more towards, instead of just tokenizing assets, start offering services. That's where the announcement of the Ondo Perps really comes into play, and really moving more towards anything that exists in TradFi from a services perspective, and really prime brokerage in the end, starting to recreate that on-chain, and that's what Ondo's really going to be focused on.
Crypto's been such a big retail trading asset class. Retail has kind of taught us the way to trade 24/7 and to trade a very wide range of assets. I think there's a little bit of reliance, especially with tokenized stocks, that retail is going to want to jump on that asset class next in that context. What do you think there? Is this a lot of product being built for an untested amount of demand, or do you know the demand's there, or are you saying, I don't even need retail for us to be successful here, it's really about the infrastructure onshore in the United States with institutions?
It's a great question. I think, we launched our On the Global Markets platform back in September. We had done some user research to figure out, is there really demand on chain for tokenized stocks and ETFs outside the US? We felt pretty good about that thesis. We've always focused on tokenized stocks and ETFs because, quite frankly, those are the assets that people want the most, right? And billions of people around the world typically have struggled with getting access to those asset classes, so we felt that it would only make sense to put these assets on chain so that we could do for stocks and ETFs what stablecoins did for the US dollar. We launched it in September. We have only, since then, the platform's only grown, more or less. We've only seen 3 days with net outflows out of the platform. Capital is only coming in. And as we get more distribution partnerships, right now we're live in the Binance wallet, we announced MetaMask exclusively today, the OKX wallet, BitGet, all of these, particularly Southeast Asian, but global exchanges are starting to offer stocks and ETFs to their users. It is much easier for them to do that in tokenized form than it is to work with normal stocks, because normal stocks, you can't settle them 24/7 via stablecoins, right? You can't do normal custody on them. These crypto exchanges have built out custody, accounting, everything works with tokens, so it's much easier for them to do that with tokenized stocks, and we're seeing very rapid adoption from that retail segment, particularly if we end up now hitting into a more challenged crypto environment where crypto prices are depressed. People want more exposure to stocks and ETFs, right? There's a lot of FOMO around gold, around metals, more broadly. Our platform right now enables anyone globally with stablecoins to buy these assets at the same price that they would be able to buy it like in a brokerage account. That's a meaningful innovation, and we're seeing real demand offshore.
You mentioned the MetaMask story that broke this morning just before we started the broadcast. A lot of announcements coming out of the summit. Which one is the one that you want to highlight that indicates where Ondo is going for 2026?
Ondo Perps, by far. So we announced Ondo Perps today. It's going to be the platform that offers the best liquidity for perps on equities and commodities. And the reason we can offer that is because the key innovation that we're enabling is having spot assets, so any type of tokenized stock or ETF, pledging those assets as collateral so market makers can very easily open up a short, be fully hedged in the eyes of the platform, and really add liquidity to the venue. Every single other venue right now only offers stable coins as collateral. And that gets you into trouble when you really want deep liquidity on the other assets. So I think that really is the key differentiating factor. And the reason we can uniquely do that is because we've built on the global markets that puts the TradFi liquidity of all these spot assets on chain. So I think it's a good example that also just illustrates how all of our platforms are composable with each other. Like we can do perps in a different way because we've built on the global markets. And ultimately what we're really building towards is really truly prime brokerage on chain, where perps is really just the first step in that path.
One of the recurring themes here is there's 15 different ways to buy Bitcoin now, right? And a lot of what you're talking about, I don't want to say relies, but is aligned with crypto native trading behavior of using centralized exchanges like Binance or Coinbase, and using perps, right? These are very natural things that have been battle tested now for quite a long time, but have to remain vibrant, right? That has to remain the case. Now you can buy ETFs on a bunch of crypto, so are people going to still be using those centralized exchanges and still using perps? Do you think that investor behavior continues?
I think so, quite frankly. I think all of these crypto exchanges, crypto wallets, all of these platforms are just evolving to be an everything app, right? When you take a little bit of a step back and you look at the space, it doesn't actually make any sense why you would have a separate platform for crypto and then all of a sudden a new platform for stocks and ETFs. Why does that have to be the case? Makes zero sense. You as an investor just want one app, one platform where you can buy anything you want. And if that includes going long on stocks or crypto via a perp or via spot margin, options, prediction markets, all of these things should be possible all on the same platform. And I think that is the power of the Ondo Global Markets platform and now Ondo Perps that we're building, and we're looking forward to partner with a lot of these crypto exchanges so that they can offer it to their end investors.
Ian, thanks so much for joining us at the desk. Thanks for having us at the
pleasure.
summit, and we'll see you around.
Sounds good. Awesome.
Thanks.
Thank you.
That was Ondo Finance President Ian DeBode. All right, Andy, we're going to get to our next interview, and we're about to break some news. I don't know if you knew that.
I don't know that. Nope.
Yeah, we are going to break some news live on air.
Fantastic.
We're going to get our next guest in the seat. But Andy, I'm so curious to hear from you. Like I've been mentioning throughout the broadcast, you and I were here last year for Ondo Summit. Here we are again. What do you make of the progress that's been made in tokenization?
By the way, just being there another year is a good start,
I
right?
know, right? Being there another year is a real good start.
It's a real good start.
Industry.
That's how you win by showing up the next day. A lot of the keywords have changed. Showing progress. Stablecoins now are kind of done, regulated, in place, and growing. Tokenization means new sources of demand, new building. Kind of the most exciting things, I love the DTCC and State Street's conversations about infrastructure being built up. If blockchains are going to be used for collateral movement, and that vastly improves how collateral moves around every day, the credit markets will get much better, and blockchain use is going to be permanent then. So that's the slow money stuff. The M&A and the infrastructure build and the regulatory process have been great, and all that's been in the last year since we were here last.
For me, we were talking about tokenization as a concept. We were talking about a lot of plans and a lot of thinking and a lot of research, and only 1 year later, we're talking about real things happening. We're talking about pilots. We're talking about trillions of dollars in assets going on chain, and what a small amount of time for so much progress to be made.
It's one of my favorite dad jokes, I guess, or one of my favorite kind of observations is usually only that much change happens when there's a giant crisis that happened last week, right? You have to repair everything was wrong and do triage and figure things out, and that's how you end up with things like the giant Dodd-Frank bill or new market structure, or less leverage within banks. All this got done without a crisis behind. In fact, in a pretty calm market. That's the most incredible thing. And the fact that actually the blockchain conversation is having a lasting and healthy impact on how the regulators look at each other, work together. So it's pretty incredible. Retail should have a lot more things to be able to trade. But kind of what excites me the most is that the institutions will have this infrastructure in the engine room that's much more efficient, and that should help make global markets be more resistant to crises. Might kill some people's weekends now because more things will be 24/7, such as life. But financial resiliency could be one of the great outcomes of this whole set of progress.
I love that, Andy. Now, as Ian mentioned to us just a few minutes ago, there have been a lot of announcements, a lot of news coming out of the Ondo Summit, and we are about to break some news with blockchain.com's CEO, Peter Smith. Hello.
Hey, how are you?
I'm doing well, thanks. How are you doing?
Great.
All right, we are going to hear about something for the first time, so take it away. The stage is yours.
Yeah, thanks. So we're really excited that we're expanding our pilot to offer tokenized on-chain stocks into Europe, so offering stocks tokenized on the Ondo blockchain across Europe. We had previously launched it in Nigeria as a test pilot and seen a lot of really strong demand for that product in that market, and so wanted to expand the access across the EU as well as our rest of world markets as well.
Talk to us about testing in Nigeria and then expanding to EU. It sounds like two pretty different markets to me. What learnings are you taking from the Nigeria test over to the EU?
Yeah, I think there's a lot of product marketing that you need to do. You need to really explain to folks like how these tokenized securities work. I think equities on a blockchain is not as maybe immediately recognized. I think it's still a new concept for most consumers. At the same time, there's a lot of excitement about having expanded access to financial products. So, in the EU, there's largely relatively not easy, but ways to get access to US equities. And a lot of our key markets, like Nigeria or Ghana or Colombia, sort of the BRIC countries, it's very, very hard to get access to US equities away from tokenized equities that you have access to today. And so there's some sort of explanations that need done. There's some product marketing, but in general, we've seen really strong uptick on the product.
I mean, tons of questions. What's your ideal user look like? What's their holding period? What problem are they solving? Let's start with who's your best persona?
Yeah, so we exclusively offer it to retail users. They're usually young, so in their mid-20s to mid-30s, predominantly male. Most of the demand will come for either indexes or Mag 7 stocks.
Mm-hmm. And do you anticipate longer holding periods? Are they allocating now that they have access, or hopefully
I don't think we know until we let time go by.
Right.
We launched the pilot relatively recently.
Yeah.
We just have to wait and see.
The use of indexes suggests at least that it's less of a. We had the founder of StockFoots on earlier today, who works with a lot of higher frequency type of people and young investors. We hope that they like to invest for the long term, but they tend to like to have fun too. So
yeah,
I do anticipate that these are allocations that stick around.
I think your younger investors tend to turn over their positions more frequently.
Yep.
So I think there's a real, and this is what we've seen on tokens like on Bitcoin or Ethereum or Solana historically. The older someone is, the less they rotate their portfolio. The younger they are, the more they rotate their portfolio. And you probably rotate your portfolio more before you get your first big short-term capital gains bill. But I think, jokes aside, as the cohorts sort of age and get used to the products, they do tend to hold on to them for a longer period of time.
I want to talk about that Nigeria use case for a second. Crypto really popular for young Nigerians. When tokenized stocks were introduced, how popular were they in compared to crypto? Can you tell us a little bit about what you saw?
Definitely saw it be one of the more popular product launches in Nigeria that we've had. I think that, you'll see people sort of engage with these new features, and then you want to see continued engagement. And what's been really encouraging for us to see is the continued engagement. And I think, at the end of the day, Nigeria is a relatively smaller market, a smaller sort of AUC market for us. And so we're really excited to roll it across like some of our more mature markets, and where there's a bit more buying power and a bit more capital that could potentially come into these instruments.
How does the revenue model work? Do you need a lot of volume, or is it kind of AUM, or how do you expect?
You need a lot of volume.
You need a lot of volume.
When you're in the brokerage business, you just want people to trade.
Right.
And so, one of the things there is you want to offer assets that people want to trade.
Yeah.
All right. And so, ultimately, folks ask why we add assets, why we do this, and it's like at the end of the day, if we have high quality products on our platform, people will buy them, they'll hold them, they'll sell them. And that's ultimately how we are successful as a business.
And you need liquidity so that people will get interested, right? They need to see other volume to get more volume, and that involves market makers and a whole infrastructure.
Yeah.
Just like any other launch, right?
Just like any other asset.
Yeah.
Talk to us about working with Ondo. Why Ondo?
Yeah, so we've been working with Ondo since before Ondo launched. So they're a key partner to us on our institutional business. We're a key partner to them as well. We've known the team, and known Nathan, the founder, since they were first raising capital, and so we've been really a long-term partner to them across many facets of our business. And so when it came time to look at different, folks who are launching on-chain equities, Ondo was a very logical choice. I think a lot of picking your partners in these products is knowing that you can trust them, and we'd built a really strong foundational relationship with them, since the very beginning.
You are entering a world that of a lot of choices, and whereas you may be able to offer US equities to people who have a hard time getting a hold of them, they do have other choices. Distribution is key. So now you're covering two very, very big markets with products that require distribution. How do you think about that?
We think a lot about, and we have 40 million retail users that we've verified around the world. We think a lot about making sure that the choices we make on products are really strong choices. So, do we trust them? Do we trust that if you go to redeem that tokenized equity, there's actually going to be a share behind it? Right?
That's a good first check.
And people sometimes forget that one thing with the tokenized equities is like, at some point we're going to experience situations where there isn't actually an equity behind it.
Right, yeah.
Right?
Key feature.
So we got to be, you have to be confident that your partner is actually, actually doing what they say they're going to do on the tin. And then I think the other thing that we think a lot about is wanting to give our users the balance between sort of letting them make their own choices and giving them access to a wide variety of products, but also our role as sort of a platform and as almost a filter or an advisor of what quality products are. So for example, we'll label things on our platform as like, alpha or beta or verified, DYOR. And then, other things obviously a bit more reputable, a bit easier to trust, like, tokenized QQQ or tokenized Google, like those are high quality assets that we can be very confident in.
Peter, thanks so much for joining us at the desk and closing out the show, and thank you for sharing your news with us.
Thank you.
Thank you.
That was blockchain.com CEO Peter Smith. Andy, we're at the end of the show.
Already.
What a pleasure it was to host with you.
As always.
Yeah.
As always, you and your blazer.
Me and my blazer, you and your tie.
I know. We're bringing it for the Wall Street crowd. Wall Street in this room is not a dirty word. It's a happy word. It's where we want to get.
It's a happy word. It really is. Walking away from the summit, what are you taking away? What are you noodling on?
I'm just thinking there's more and more ways to get access to different markets, and it'll be exciting to see. I think it's fair to say retail maybe surprised the world a little bit by embracing crypto so hard and creating so much liquidity and creating a asset class that topped out at $4 trillion and will go higher someday. And now they can trade Apple shares or QQQ in Europe in a tokenized version. The progress is phenomenal. Our StockTwits guest reminds me that you still have the same, I guess, emotional approach to trading. You see a lot of volume, not a lot of buy and hold. You have a lot of useful exuberance and approach to the markets. But that's great, right? That's what it is to get people involved in trading earlier and to get them into a position where they can build wealth. So everything feels healthy. And on the whole other end of the spectrum, we're tokenizing things so that collateral can move 24/7. So I think we've made a pretty good amount of progress in the last 12 months.
I think we have too, and I think access is a key word that you mentioned and our last guest mentioned as well. So many people who are maybe a little bit reluctant to the institutionalization of crypto will go back to the ethos, this was supposed to decentralize finance, this was supposed to offer access, and I think we're hearing that it is solving for access in different ways, while the other way of solving for access is still happening in some more crypto native or more DeFi circles.
Totally. My distribution question at the end was important because I don't see a lot of selling here. I don't see ads. Well, Super Bowl's next weekend, so we'll see what pops up, right? But still, there isn't an army of distributors going out there and saying this stuff. There aren't the E-Trade ads from 20 years ago or the Coinbase ad from a couple of years ago in the Super Bowl. So we'll have to see what happens when this really starts to get pressed into people. Right now, it's discovery and viral. That's great. Obviously, once things start to get sold more, then you really have an explosion. I do agree that if somebody wants to buy Bitcoin or Hyperliquid or Microsoft stock or gold or a treasury bill, having it all in one platform is probably going to create a better experience, and I think that's going to be a winner.
Yeah, look, I could be wrong. I did go through a list of Super Bowl ads. I don't think I saw any crypto companies on there. I haven't heard of
insurance companies.
I haven't heard of a stadium sponsorship in a while.
No. Probably a hard path for the marketing salespeople. We need a few more years.
Yeah,
but
Andy, I'm hearing a lot about education.
Yes.
I'm hearing a lot about understanding audiences in different markets. And so again, that just points to the maturity. We're not spending 40, 50, $60 million on a sponsorship for a sports team or a Super Bowl ad. We're really looking to learn about the challenges that people are having and putting that money towards solving them.
I hope so, but let's not forget Wall Street, as actually Anthony Scaramucci said this at Consensus in the spring. It's a giant selling machine, and I think we're seeing a lot of building. When I think the selling starts is when this party really starts to get cooking.
All right, on that note, we are going to leave it there. Thank you so much to everyone at home who watched our program live from the Ondo Summit in New York City. For Andy Bear, I'm Jen Sanasi. We'll see you next time.